Hey everybody, it's me, the Einstein of Wall Street from the balcony at the New York Stock Exchange. We are coming into the end of July, right? The first month of the third quarter. Markets trading at record highs, give or take, right? We're in sight of 45,000 here on the Dow, 6,400 on the S&P, even though some people yesterday was kind of curious because at the same time, one of the big pundits came out and said that the market has never been so overvalued since the dot-com bubble era. But at the same time, Morgan Stanley came out and said that we're in the midst of one of the greatest recoveries ever and that they saw 7,200 manifesting in the S&P by year end. So you know what? For everybody who's a bull, there's always somebody who's a bear too. Amazingly enough. Anyway, I am super happy to bring you my friend Tim Anderson. Welcome to Trade Like Einstein. He's the man. Everybody here on YouTube is absolutely loving it and loving him, right? And so I try and bring you everything about markets, about food, finance, fashion, all kinds of crazy stuff. But the bottom line is at the end of the day, this is all about the markets, the economy, and where this market is going, right? We're here at the NYSE. Tim's been working here for decades. He is the man. He's got a super amazing sensibility about markets, about individual stocks that he can address that I can't. So trading at record highs, we're hitting all-time highs on a daily basis. What's your take on this crazy madness?
And we've just got everything going this week. I'll tell you, it might be the last 2 days of July, right, but it's forget about the dog days of summer because we've got macroeconomic data that was just incredible data points on the economy this morning. We've got big
what
time.
Came out this morning?
Okay, so we got the first look at third quarter GDP.
Okay.
The estimates were that the economy was going to grow at 2.4%.
Right.
The first look came in that it's growing at 3.0%.
There was a 3 in front of it. People need to know how grand it is.
That's a very strong indicator for the economy, and even more significant, the deflator or the inflation part of that report came in at 2.0%, which coincidentally is the Fed's target for inflation.
We've been talking about that since 8.5%.
And the Fed is having their policy statement
today,
in 1 hour.
In 1 hour.
So they're because their models are not really they're fighting just the fact that their models are not really right for the current environment.
Okay.
I'll put it politely. Okay, and they're not going to cut. Okay.
Right.
Because
we get that. Now let's go over
that's a longer story.
Let me talk about that for a second because look, everybody, including obviously the president, has been way up Jay Powell's business to cut the rates, right, for a while now. One of the reasons Jay Powell was not going to do it was as long as there was a lot of uncertainty around the tariff question, which created a low to no growth environment. Right. Obviously, the fear is if you do that within a low or no growth environment, cutting rates will cause stagflation, inflation with a stable or a low growth economy. The numbers you just took me to are the grandest goal for the last 5 years. When we were at 8.5% inflation, the goal that the Fed's been talking about is 2%.
Right.
You also just said that the GDP, which is the base explanation of where the economy is going, is growing. We are not contracting.
Right.
So sets the stage for the Fed to cut. But obviously, we're just hearing about this today.
They've already made their decision.
They've already
yesterday. They're not going to cut.
Probability is virtually nothing that they're going to cut. But all those numbers and all that information is surely going to curate the press conference that happens at 2:30.
Sure.
And so what are you thinking here?
Well, so look, they will get questions on this, obviously. They will say, what else do you possibly need?
Right.
Okay. On other measures of inflation, there are different ways to measure
Lots
inflation.
of different metrics, absolutely.
Since inauguration, the inflation has been running at 1.8%.
Right.
So that's a little bit below their 2% target.
Right.
A lot of the higher inflation numbers on the 12-month rolling average were from last year. Those will eventually come off the 12-month moving average as we move further into the 2025 calendar.
Right.
So we're going there. We're going to get there. It's inevitable that we will come closer and closer to 2%.
Correct.
On the other
even with the
metrics.
tariff.
Their freak out will still be that look. We just are now finding out what the tariff rates are going to be, and we don't know how much inflation's that is going to cause look, all the inflation that we saw, COVID and post-COVID,
Right.
was from the money supply being exploded into the
Correct.
system.
Correct.
Okay, so
$3 trillion over 3 months coming in for COVID.
growth does not necessarily de facto cause inflation.
Right.
It depends on how you're on how you're getting that growth. And I'm not going to get too wonky on it.
Okay.
The one part of the whole equation that is underestimated and underappreciated by the Fed is productivity. Okay. So if you get growth, if you get expanding growth through a higher level of productivity,
right.
which can be created
That's gotta be the purest form
by a lot of these companies now implementing these AI tools
Right.
that we first started to hear about 12 to 18 months ago.
Right.
That is
When Nvidia was trading at $108.
That can be non-inflationary growth.
Wow.
Okay. Or
I love
growth
that. Nobody
with
but you could think that.
or
yes.
growth with minimal inflation. Now, if
Yes.
you were to roll back the tapes
Right.
to the late 90s,
Right.
when Alan Greenspan, he's very famously stated more than once,
Right.
after he had stepped down from the Fed chair, that the big thing he missed during the economic growth that we had from the internet revolution
Right.
in the mid
Late
to
90s,
late 90s,
right.
was that they underestimated the effect of productivity on the economy.
Really?
And my feeling is that's what we're just in the first or second inning of starting to see this time around. So look, we'll see where we go. It's not just the Fed, it's the macro data,
Right.
but we've also got big time earnings coming out
Yes,
today
tell me.
with Meta, aka
right,
Facebook,
right.
and Microsoft.
Right.
Okay.
Which is trading at record highs.
Two
Okay.
stocks that are at or near record highs.
Yep.
And then
Major Mag 7
tomorrow
stocks.
we've got Amazon.
Right.
We've got Apple.
Right.
And we've got a few other stocks that are just down the food chain a little bit in terms of being big AI-driven
Right.
and
Are you
vol
comfortable
stocks.
with the fact that now, so obviously last quarter, we did have actually robust earnings, but inability for any guidance whatsoever.
Look,
Now we have good earnings with the ability to give guidance.
Okay, so here's what I think the most important thing to listen to in what these companies have to say in their guidance, and we
Okay.
saw it a little bit from Google a week ago,
Okay.
aka Alphabet, I guess they
Right,
call
right.
it now. So Alphabet said that they were one of the reasons the stock turned around from being down 5%, from being down 5 points to
Right.
being up 5 points.
Right. And it's
During
basically
their
flat year
during
over
their
year.
conference call
Right.
was that they are going to increase their CapEx spending tremendously.
Okay.
Okay.
In AI particular or in all over the place?
In
a lot of
AI
things, okay.
mainly, but also
Okay.
just to bring themselves to be one of the leaders in the
Right,
AI
right.
revolution.
Right.
Okay. So that's what you want to listen to from these companies.
Right.
What are they talking about with CapEx spending? Why is that so important? Because part of this big, beautiful bill that got passed,
Right.
one of the most revolutionary things about it that's still a little bit underreported,
Right.
is that the ability for companies to do immediate expensing on their capital expenditure
Right,
budgets,
right. That was the
rather
tax
than
part of this
rather
little
than
rule.
depreciate them out over 10 years or something
Right,
like
right,
that.
right.
Okay, so companies should really spend as much money on research and development
Now.
and capital now, because
Right.
it can all be immediately
Can be expensed for later, right?
And we saw that statement from Google. I am sure that people are also gonna watch very closely to see what Meta says about
Right.
it, to see what Microsoft says about it, and then to see what other companies say about it. Going
That's
going
Nobody
forward.
but you thinks. I mean, you just laid out the scenario for why it makes sense to actually probably cut in September. Why the market is trading in the eyes of still some uncertainty around the deals. Look, they promised deal, done a while ago. during the time we were sort of focused on the Middle East confrontation. A lot of the backroom diplomacy was being done. These guys in the administration, whether you like them or not, have been busy. We got deals with the EU. We got deals with Japan. We have deals with Philippines, Laos. So many of these larger trading partners we've got deals with. We're checking off all the boxes. And we finally once we get a deal with China, then we got a green light for NVIDIA to start selling things to China once again, right? That Huawei thing is off the table. And so that's going to green light a lot of work. What's his name? Jensen Huang went to the White House. They had a really good meeting.
They got one positive development. It's not their latest and greatest chip, but they're allowed to sell their H120.
Exactly. So look, you're setting a scenario for nothing but good news, right?
And to follow up on what you were talking about earlier, where there's this argument between, the market's way overpriced. It's really not as overpriced as that one pundit was talking about. The market can still go higher, et cetera, et cetera, et cetera. Some people are talking. It's always going to be what someone is not really talking about.
Right.
And I think that is not necessarily a melt up like what we've seen in the past, where we have a parabolic shot.
No, we're seeing
up 15% in a short period of time.
Which is never a good scenario.
But I think we're going to have a slow, gradual grind higher.
Yep.
Like a slow, sneaky melt up higher.
And I agree with you because we talk about it. What it feels like, if we've been here for a long time. Sometimes the media may say, "Oh, a bit of a lackluster summer day, kind of nothing going on." But if you look, Tim is really great at this, and I'm okay with it. Looking into the nooks and crannies of what's going on, I see buyers with conviction. We're seeing the market open and sell off a little bit, and then you see a beautiful trend up each day, intraday reversals, where you feel that the under-invested, right? We know, we've talked about it, $6 trillion on the sidelines still of people who have missed, kind of are playing catch-up now. And that is buyers with conviction. People are picking their spots. And what that creates is an environment where you're going to see that slow grind. There's nothing wrong with the slow grind.
No.
Right? Well, look, when we see capitulation on the upside and the downside, we know that is not real. The net follow-through reaction to that isn't a good thing. Because it's overreaction, it's emotional. But when you see the slow grind up with a beautiful trend, the trend is our friend. Right? And old Wall Street saying, and that can be a beautiful thing.
And we can have a little bit of volatility along the way. That's okay.
But
then when we have 1 or 2 days down, and then if buyers come in and you do a little bit better the next day, the day after that, we'll have a little bit of sector rotation along the way.
So tell me, last thing we'll talk about is we are seeing that, right? So you're not seeing any big down days, right? Which would mean people are fearful that the market is going to blow
a few
up.
Individual stocks that are
right. We are seeing good rotation. We are seeing people getting out and underperformers and getting into things where there's value.
Sure.
Okay, so you know what, Timmy, you're amazing, and you're explained to us in such a good way why we're trading at these levels across the board. Are there numbers, just to close this out, are there numbers that are you comfortable with the fact that, like Dan Ives said, that he easily sees a 7 in front of the S&P by year end? I mean,
look, we had
6,400. No one would have thought that.
Advanced Micro Devices has had a phenomenal
100 points.
move.
I know.
Over the last 3 or 4 months, and just the other day, a major firm raised their price target to $200 when it was trading at $170.
Yes.
Somebody today raised their price, either today or yesterday, raised their price target on NVIDIA to $200. Okay, now that's not a monstrous move from here, but both of these stocks are stocks that have already had very strong moves off their lows earlier in the year. And, that's just, look, they could be right, they could be wrong, but you definitely have some upside to where the people talk about the market being ridiculously overvalued. Look, on a PE basis, the S&P 500 is maybe trading around 22, 23. Before the crash in 1987, it was 27.
Right.
So there's been times in the past when the valuations have been much higher.
Stretched,
obviously, 40 years ago, a completely different environment.
Right, no comparison.
But you have a lot of positives in the macro side. You have a lot of positives in the the geopolitical side right now.
Right. Yeah, absolutely.
And you have a lot of
We
positives.
are checking off all the boxes. The last
Right.
thing I'll ask you about is Tesla. Dan Ives said they came out with disappointing earnings.
Yep.
They missed on all the different levels.
Yep.
And
Yep.
Dan said that he feels that the investment community needs to understand Tesla is no longer a car company; it is a AI company.
Okay.
And that
Yep.
once it figures that out, we will have a much more robust earnings season because we were down on the fact that car sales were down.
Yep.
But in fact, it is no longer a car company. It is about AI. Any last thoughts on that?
You know what? I'm certainly not going to argue with Dan on that. He's the expert on both the AI field and
Tesla.
on Tesla.
Right,
He knows
for sure.
Tesla very well.
And Elon Musk told him to shut up.
There's no doubt that Elon has spent and invested as much in AI infrastructure as any of the major companies that are also looking to be a leader in that space. Yep. Elon is a brilliant guy,
Yep.
revolutionary.
Yeah.
I certainly would not bet against that thesis.
Beautiful. So you know what? Now we know why we are where we are. There's no one better than Timmy. Timmy, thanks for coming to Trade Like Einstein. Ladies and gentlemen, we're closing out July, and that's all I got to say about that. Later for you.